man, it's more Chris Alia, aka CEasy, and welcome back to the channel, welcome back to the lifestyle, welcome back to another video. And this is episode 2 of Investing for a Million. The whole purpose of this series is to document my journey to one day having an investment portfolio between, stocks and crypto of $1 million. And in this specific episode, I'll be showing you guys my $10,000 Robinhood portfolio. I'm going to be letting you guys know the holdings that I have, my plan for it, and why I'm holding particular stocks, because I am really heavy in certain sectors, but I'm gonna let you guys basically know why. Without further ado, I'm gonna pull up my portfolio. It's gonna be more of a chill video. I'm gonna show you guys it on my phone. Let's go ahead and get this video started. Alright, so as we can take a look on my portfolio on the screen right now, it is a total of $10,090. See, my buying power is about 65 cents. Just so you guys can kind of see how I've been performing over like this past year. I'm only up 8%, which equates to about $800. But as you guys can see, I've had peaks of close to like 17-ish%, where my portfolio hit close to 11K, and then it's just been kind of like the stock market has just been crazy. My portfolio specifically has been moving sideways, but let's get started. So first, we have the REITs. I'm not gonna spend too much time on these. I have AT&T, Alia Capital, Triple N, Stag, and Realty Income. These are my holdings for this dividends, because whenever I first started investing, I was very, very heavy on just, dividends. I gotta have it in my portfolio. And even now, I understand the importance of dividends, but I'm leaning more towards growth, because most of these companies I plan on holding for a very long time. Like, some of these companies I've already been holding for almost 2 years, but the new ones that I recently added, I'm kind of looking towards like, that 2025, 2030 mark before I really feel like these investments will pay off. But I have about a cool $300 to $400 in REITs. Okay, so now we have the companies that I'm like most interested in. So these are like what I like to call like the online retail space / small business space. So we have Chewy, Etsy, Target, Walmart, and Square. So for those of you guys who may not know what these companies are, I'm gonna give you a quick rundown. If you have a pet, you have to know Chewy. It's basically the online spot for pets. You know what I mean? Right now, it's owned by PetSmart. Previous owner was Ryan Cohen. He was basically the founder. But as of like recently, or like a few years ago, PetSmart went ahead and bought them out. And I was actually in the earnings call because I was curious to see how the management and everything is. And I mean, they were like some great people over there. They answered a lot of questions, and just the direction of the company, I feel like it's in good hands. So I'm pretty happy about this one. Etsy, my girlfriend put me on display. I wasn't hip to Etsy, but Etsy is basically an online selling market. You kind of think of it as like, eBay or something like that. You go to a platform, I just feel like you can find so many creative things that kind of got put on for mask, but then the people who came for mask saw everything that Etsy had to offer. So it just kind of started elevating. Then we have Target and Walmart. The main reason why I want to start building a larger position within these particular stocks is because they have supermarkets. They have like the in-person retail down, but I'm betting on within the coming years, their online retail will pick up, probably start mimicking business model more like Amazon and using like their supermarkets as more of like a storage place to go ahead and ship out orders fast. And then Square is basically just like the holy grail for small businesses. They about to have financing for small businesses. They have all the equipment small businesses need to, collect payments. And just the whole nine. It's pretty nice. And let's take a look at some of the prices right now. I think Chewy is at a good price point. As you guys can see, I got in pretty high. I'm trying to average down. At the same time, I don't really have a lot of free cash, but I still feel like right now is definitely a good time to buy Chewy. Etsy is at $197. I got in pretty low, 36% gain right over there. Target as well is at $206. I got in at $175. Walmart, my average cost is $124, and they are at $139. So you haven't seen as much growth, but I feel like for Walmart, it does have the potential to run huge, because I think I decided about $3 billion for online retail. So I expect a lot of growth from them to come in the future. And as for Square, it's currently at $229. My average is $194. First time that I started to buy was at $66. And my bro put me on, and like I knew exactly what he was talking about. Whenever I would go to small businesses, I would always see the little square symbol, little S, and I was like, what is this? It's so cool that these businesses have like these ways that you can accept cards, and this looks updated. I'm just like, dang, this is live. And I didn't really realize the whole concept until they just started to skyrocket. But huge shout out to my bro for putting me on Square, because it's a great company, and I feel like they still have a lot of room for growth for sure. For the REITs, I'll just let you guys kind of see where I got those at. For AGNC, I started buying in at 15. My average cost is 15. It's currently at $16. Alia Capital basically stayed the same. Triple N, basically taking a hit. I've been at a loss with them for a cool minute, but I just don't feel like selling them. We have Stag. I'm up 8%. And then Realty Income is probably my favorite out of all of them, and I'm up about 5%. Okay, so now that you guys have seen the REITs that I have in my portfolio, you've seen like my online retail strategy, which is right over there, and now I have some banking. Technically, you can count Square now with financing, but for this case, we're not. And as you guys can also see, I do have a pretty large holding of $500 within Square because I do believe in them. Okay, so now financial stocks, I have Discover, JP Morgan Chase, American Express, and Visa. This is essentially like most of these banks are banks that I bank with. American Express will probably be my third credit card. I currently have a Discover credit card, and I just got the Chase Freedom Unlimited card. If you guys want to know like the best first credit cards, check out this video above right over here. The holdings is not too large, as you guys can see. I got $5 in Visa, $7 in American Express. But if you take a look, I started buying when it was dipping during the pandemic, so I could have been up 50% with American Express if I had more money. With Visa, I'm up 12%. JP Morgan Chase, I'm up 62%. I did not even know that. I haven't purchased since. And then Discover, I know I'm up a lot. I bought in at 76%. Looking at these percentages, because I really don't keep up with the holdings as much, or like these are like my stable ones. These are some big percentages. You know, I really could have put more money in, but you know, it is what it is. I can always average up. It's like my financial stocks, companies that I can just not see going anywhere, because with, financial / banking stocks, for the big dogs, the government will always bail them out, as we've seen time and time again. Like, they're fine. Pharmaceuticals, I sold off a lot of the pharmaceuticals. I used to have Johnson & Johnson. I just went ahead, I sold them. Like, even with the vaccine, they weren't really moving. We have AbbVie, one of the dividend guys. This is like one of those companies that you really should have. My average was 79. I'm up 33%. I'm close to a 4.5 dividend percentage. That's all I have for pharmaceuticals. AT&T, this is dividend. I'm gonna go touch on this. I've started buying in, hovering at this point, but like that I've made, I'm basically in the green. And now we have the bulk load of my portfolio. We have tech, okay? So, ignore Tesla down. I'm gonna go ahead and touch that. But we have Microsoft, Apple, CrowdStrike, and TSM. So you guys should already know Microsoft, Apple, CrowdStrike. They are a cloud-based security service. They basically prevent hackers from getting into these big businesses and stealing a lot of data, information, and even money. And then TSM, they're a semiconductor company. Pretty sure that they're partnered with Apple. But as you guys know, with the semiconductor shortage, it's been affecting just like the whole tech space, just in general. But for Microsoft, as of right now, I think they're in talks of basically getting Discord. Hopefully, they do end up getting it. I feel like it'll be big for them. And I remember I was talking to my bro, because I've been holding Microsoft for a minute. As you guys can see, I'm up 50%. Both agree that Microsoft is kind of like in this kind of like stalemate. Like, they have consistent revenue coming in month after month, with their subscription services. But I feel like they're just missing just one thing to just kind of, take them from close to a $2 trillion company. But I feel like if they add like one more major component to their company, they could potentially go up to like a $3 trillion company, which is a large valuation. But I do think that it is possible. Apple, as of right now, they're a $2 trillion company. They do have potential to move to $3 trillion. As you guys can see, I'm only up about 16%. I've been averaging up a lot just because of the fact where, the things with Apple and how they want to enter the EV space. But the thing about it, something that I basically heard, and this is crazy because me and my bro, we talked about this I think 4 years ago. We basically was saying bro, one day Apple was going to enter the electric car space, and it's only going to make sense. And I was like, explain what you mean. And essentially what he was saying is that Apple, they don't necessarily need to make a vehicle. All they need to do is make some type of technology that the EV vehicles need, hence the autonomous driving. So I think what Apple's move is going to be is that they're not really going to pop out, at least I don't think they're going to pop out with an EV car, but more of just one of the best autonomous driving softwares there is, and then just lease it out to every single one of these EV car companies. I think that is the best move for Apple, and I think with that alone, over the next few years, they can have a valuation of close to, if not past $3 trillion. TSM, Tesla. TSM, I think I'm down about 2%, and then CrowdStrike, I found about 10%. We have the largest holdings in this whole freaking portfolio. So ignore Riot and Plug. I'm looking for an exit point for both. Kind of FOMO'd in Plug. Plug is a pretty good company. I just personally don't understand too much about, like, you know, just the little green energy space. Just didn't do my own due diligence, and I FOMO'd in. Same with Riot. I'm kind of just holding to see if I can, you know, recover some of these losses. Now we're going to take a look at some of the biggest holdings in my portfolio. So we have Tesla, MP Materials, NIO, and CEasy. So as you guys should be able to tell from this right here, I'm extremely bullish on the EV space. You know what I mean? So MP, if you guys do not know, I was able to find this play from Dead Inside. My bro had pitched this video to me. I looked at it. Basically, they are a rare earth mining company. So they basically mine the materials that are necessary for EV companies and, you know, like tech companies, but primarily EV companies. Was able to get in, you know, about 32. They've been going up and down, but I just believe that the thing that makes this company stand out so much, and I was in the earnings call, is that the same thing that the investors think is the same thing that they're rocking with. They just see it as a very rare opportunity that they have, and as long as they keep going, they feel like they're going to be able to position themselves for success. You can say they're grandfathered in because they're the only people in the US that are mining these rare earth materials, and that kind of just puts them ahead. And as more and more EV vehicles hit the road, you could expect MP Materials to be able to grow with them. I feel like everyone should have NIO in their portfolio. Basically, this is an Asian EV company, basically backed by the Chinese government. So despite the fact that, you know, I'm down about 16%, I think this is a great buying point. I've been averaging down a little bit, and NIO is going to make up a large position for me. And NIO is basically going to be one of Tesla's biggest rivals, except it's going to be on the other side of the continent, whereas Tesla will probably hold things down in the US. As you guys can see, Tesla literally makes up 50% of my portfolio. Extremely bullish on them. I'm only up about 3%. At the peak, I was up, I think, almost like 30-40%. Things kind of went down. I think this is a great buying zone. But the first profitable year, you have Kathy Wood with her crazy valuations. And just overall, I mean, I feel like every person should have Tesla. If you believe in the EV space, the EV market, then you need to have at least a decent sized Tesla position in your portfolio. Then we have my sleeper, CEasy. They basically had a merger with Lucid Motors. So essentially, buying into CEasy is basically buying into Lucid Motors. You guys know Peter Rawlinson, who was the chief engineer for the Model S. And essentially, what he's trying to do, he's trying to basically make a luxury EV company. That's basically all he wants to do. So most people say that this is in direct competitors with Tesla, which I understand those claims and I agree with it as well. But he even states that he wants to go for, like, you know, the Mercedes-Benz and the BMW. So it's a very interesting take on what EVs can become, and they're projected to hit the road this summer. So that's basically kind of why I'm a little bit bullish on them, because, you know, there's not too many EV vehicles on the road or companies that are fully EV. Right now, I'm down a lot. I'm really just gonna go heavy, and I have like a share goal of how many I want to buy. It is a lot, but this is one that you guys need to move with caution, because if they do not have a car on the road at the expected time, or if there are like problems with the car, this will take a hit to the company. I'm willing to, you know, kind of bet that they have some tricks up their sleeve. You never know. A Lucid Motors, you know, Apple autonomous driving collab. What you guys are probably thinking, well, Chris, I thought you said this is a $10,000 portfolio. That's like $7,500 or something that you just showed us in actual stocks. And as we can see, I'm heavy in crypto. I'm not going to lie. Crazy gains in the crypto. You guys make sure that you guys stay tuned for episode 3 of Investing for Millions, because I'm about to reveal my entire crypto portfolio. Anyways, guys, if you enjoyed this video and you found it helpful or informative, I just ask that you smash up that like button, subscribe if you're new here on the channel. I talk everything business and fashion related. But it's your boy Chris Alia, aka CEasy, and I'm out.